let's talk about where the US dollar, the DXY, the EURUSD, and also the pound USD are likely to trend this week with FOMC tomorrow and also the last trading day of the month. Plus, we have NFP on Friday. Okay, so we have a jam-packed week this week, and this is likely going to satisfy a lot of people's desire for volatility, which we haven't seen so far in 2024, because we do have the first FOMC of the year coming up tomorrow. Tomorrow is also the last trading day of the month, which tends to produce some erratic price action. So keep in mind, guys, that the next 24 to 48 hours are likely to produce a lot of volatility across the Forex market. And the same thing with Friday, because we do have non-farm payroll. So expect a lot of volatility coming up here this week. And starting here with the DXY, let's talk some key levels, and then we'll get into what I think we could see over the next couple of days. So the DXY is still struggling here with 103.50. We've talked about this at length, but you can see going to the 12-month time frame, every candle on here is a 12-month period. Okay, so 1 year, and you can see going back to 2016, this area around 103.50, 103.60 or so is a critical level going back to 2016. So that's why the DXY has stalled out here. Okay, so heading back here toward the daily time frame, what I've kind of maintained is that we could see a breakout here over the coming weeks. However, the thing is, when you're going into something like FOMC and the last trading day of the month, which again tends to produce some erratic price action, you have to expect some volatility and the potential for some sweeps. Okay, so that's what we're going to talk about in today's video. And specifically with regard to the DXY, we have this trend line off of the closing price from right back here, December 28th. We have this low right here, and you can see how the DXY is held above this over the past week. So today is holding above it as well. However, once again, finding some resistance right there around 103.50, that level going back to 2016. Okay, so here's kind of what I think we could see over the next couple of days. And before I get to that, I do have a really important announcement to make. So going forward, guys, I'm going to continue to post these videos on YouTube this week. However, they are also available on the Daily Price Action website. And after this week, they will only be available there. Okay, so see the link at the top of this video. This is really important. If you want to continue to receive these videos every day, including the weekly forecast, you're going to have to sign up on the website using that link. You can also find it in the description of this video if you're on YouTube. So the daily videos will remain free, guys. I'm not going to charge for them. However, you do have to input your email address on the website in order to gain access. You'll then be notified every time I release a new video every day, just like this one. Okay, so let's go ahead and get right into it here with the DXY. What I kind of think we could see over the next couple of days is I would be a little bit surprised if we see 103.50 break without a pullback first. And the reason for that, you can see how critical this level is to bears. I mean, every single time, including yesterday here, the market was trading all the way up here and closed back down below 103.50. So given how significant this area is going back to 2016, I would be a little bit surprised if we go into FOMC in the last trading day of the month only to see the market do this, right? I do expect some type of pullback here to sweep potentially some of these lows down here around 103.10 and even this one down here just above 102.60. Because this is our key level that we've been watching now for the past few weeks. Okay, so this is the one that the DXY reclaimed back here. And what you'll also notice is that right through here, we do have a gap. So this right now is unfilled, and this comes in right below this wick. So knowing that FOMC and the last trading day of the month tend to produce some sweeps, we know that there is a lot of sell-side liquidity down here below this low, and we also have this gap, which has yet to be filled. So what I kind of think we could see for the DXY over the next couple of days is potentially a move down here toward 103.10 to sweep some of these lows, and even a retest of 102.60 to give us a full retest, sweep this low, and then potentially from there we move higher. All right, so that's kind of what I think here for the DXY. I could be wrong, but again, given the significance of 103.50 going back to 2016, this is an incredibly significant area, and the fact that we do have the open gap right down here from these two candles, and then we also have this low, I do kind of think that we could see a sweep down here in this region before we see the dollar move higher. Of course, the chart's going to provide the answers here. So if we see a sustained break above here, right after FOMC, so in the daily chart, the market starts trading up here, then it would expose areas like 104.20s. So at the end of the day, no pun intended, that's really going to tell us where the DXY is likely to head. But I do think that you have to at least be aware of the fact that the market didn't really test 102.60 on this candle, and we do have that open gap from back here. Okay, so looking at the EURUSD, this is something that I mentioned in Saturday's forecast. And you can see where ever since this high from back here, there is a potential falling wedge here that's developed on the daily time frame. Now, we also have the trend line from the October low in this area. And like a lot of pairs out there, this one has been very, very sideways and difficult to trade. So I kind of think that, obviously, if we see the DXY pull back and retest 102.60, then we could be looking at the EURUSD moving up here to fill in wicks like this and potentially even sweep that. Now, another scenario that I've mentioned too is that you can see back here, 110, this was the critical resistance level where we got the breakout through here. The market closed below. These two candles came close to it, however, never fully retested 110. So there is also the chance that if we see the DXY pull back to 102.60 or even below that intraday, then we could see the EURUSD come up here and do something like this, where we get the wick up, retest that area, and then that becomes the area where, you potentially want to look for some shorts because we know that this is a critical resistance level. We also know that the EURUSD was unable to hold above it back here at the end of 2023 going into 2024. All right, so just one scenario to keep an eye on, but given the fact that, again, the market has kind of carved this falling wedge here, I do think there's the chance going into FOMC that we get a move up here to clear out some buy-side liquidity. So next up, we have the pound, and I mentioned this last week, but I absolutely love the technicals here. You can see that going all the way back to 2023, we have this ascending channel. So off of these lows here, you can see where the market held above it through here before the breakdown. And this up here, all this price action, these three retests are just retesting the bottom of that channel. Now, we also have a descending channel off of these recent highs and lows, okay, to give us these lower highs. All right, so lower highs, lower lows ever since back here in the middle of 2023. Now, the key for the pound, though, like I mentioned recently, the bearish scenario here would have to take out essentially these lows down here to give us a first lower low, because right now we have lower highs. However, what we don't have is a lower low. And so far, we still don't have that. So just like with the euro and the DXY that I mentioned so far, I would be a little bit surprised to see the market just do this week with FOMC. I think something more like this is more likely, potentially even sweep these highs first before we get that move lower. Because again, expect a lot of volatility this week. We also have wicks like this one up here. Okay, so if I move in, this candle right here, this upper wick, has gone mostly unfilled. All right, so potentially something up here in this area before we get that move lower, as long as the market holds above this level. You can see right now that it is testing this diagonal that I mentioned last week. So this one right here runs parallel, okay, to the bottom of that channel up here, these three highs. So as long as the market's above this on a daily closing basis, I do kind of think we could see a run back here at these highs with that upcoming volatility. All right, but same plan as what I mentioned last week. Really, the market would have to take out these highs up here, preferably even this one up here in this area, right, to turn bullish. And the bearish scenario would materialize on a close below this region here. So down here in this area, give us that first lower low, and that could turn this trend from bullish to bearish. All right, be sure to head over to the website if you haven't already, guys, using the link in the description to sign up for these videos, because again, this is going to be the last week that I'm putting these on YouTube. After that, they are only going to be on the website. They're still going to be free, but you will have to input your email address to get access to them. Once you do that, you will have access to these every single day. All right, trade well out there. Be careful this week, and I will talk to you again tomorrow.